welcome to Looking at the Markets with David Modell. Going to give you a strategy today that involves two moving averages and a particular candlestick pattern, a two candlestick pattern. And you can try it out. I recommend before you commit any real money to it that you demo or virtual trade it with no money, no real money, just to make sure that works, because no strategy here, nothing that we're talking about today, works 100% of the time. Okay, this is not a perfect strategy, does not work every time, so please be aware of that. All right. Also, before we get started, make sure you have a trading or investing plan. Don't just use a strategy because you heard about it in a video. Okay, I want you to have a plan for what you're doing. And if you'd like some help with putting together a trading or investing plan, or if you just want help with candles or moving averages or anything like that, you can email me for coaching. My email address is davidmodell@gmail.com. So let's get into it. This is TradingView for the charting, and this is AMD, Advanced Micro Devices stock, the daily one-day candlestick chart. Each candle represents 1 day of price action, but everything I'm talking about today could be used with really any time frame. The 1 minute candles, 2 minute, 5 minute, 4 hour candles, whatever it is, because the lines, the moving averages will adjust to whatever time frame candlesticks you're using. But again, this does not work 100% of the time. It's not perfect. All right, so what do I have up there? I have two EMAs, two exponential moving averages. I've got the 20 period moving average in green here. That one moves a little slower. And then I've got the 8 period EMA, exponential moving average, and that's in red. All right, and that moves a little bit faster. All right, so again, the 8 EMA is in red, the 20 EMA is in green. And so what am I going to do? Well, first of all, I'm not going to take a long trade. I'm not going to buy unless the candle is, or closes, I should say, unless the candle closes above the green line. All right. So if green means go, okay, so that's why I made it green, the green line. Don't go long until a candle closes above that green line. That's not when you buy, but that's the first thing you're going to look for, okay? So as we can see, candle closed above the green line here and here and here and here and here. All right, so I started watching here. I didn't go long yet. I didn't buy yet, but I started considering it. Now you're going to look for something else. You're going to look for a bullish engulfing pattern. It's a two candlestick pattern where the top of the body is higher than the top of the previous candle's body, and the bottom of the body is lower than the bottom of the previous candle's body, okay? And so where do you find this? It has to be green. It's got to be a green candle, otherwise it's not bullish. Well, actually you find it here with these two candles. All right, so let me do a little close-up here, all right? So this one's red, that's not bullish engulfing. This one's red, this one's red. This one's green. Not only is it green, but look at the bottom of the body. It is lower than the bottom of the previous candle's body. And look at the top of the body, it is higher than the top of the previous candle's body. Okay, we're only looking at the bodies. We're not looking at the wicks or shadows, all right? So it engulfs entirely the previous candle's body. This body engulfs the previous candle's body, and it's green. So in other words, it opened lower than the previous day's open, and it closed higher than the previous day's close. That's another way of explaining it, all right? And just make sure that it closed above the green line, which it did, okay? Otherwise, that would invalidate it, and you would not take the long trade. All right, so it's closing above the green line, the 20 EMA, and there is a bullish engulfing with these two candles. So you would take this trade, and you would probably want to wait until almost the end of the day. Since this is a daily candlestick chart, you might wait, let's say 5 or 10 minutes before the close, so that you can be sure, or pretty sure, that it's going to be bullish engulfing. Because you don't really know whether it's bullish engulfing until you know that it's closing above the close of the previous candle, right? You don't want to do a lot of guesswork here. All right, you want to be pretty sure, or definitely sure, that it's going to close above the previous day's close. All right, otherwise it's not bullish engulfing. So you would take the trade, and then you would stay in the trade. You'd ride it up, hopefully up. Okay, and how would you get out of the trade? Well, when it closes below the red line. That's why I made it red here. Okay, that's, if green means go, red would mean stop, right? And so wait until it closes, not this one. See, where's the close? It's not here, it's here. This is green. All right, the top of the body is where it closed. So it's still closing above the red line. Still closing above the red line, still, and you can see you're going to ride it up, up, up. And this one, you could have gotten out here. If you weren't sure, then the next day confirmed it. But really this one, I know it's hard to tell because the candle's on top of the line, but really it closed below the red line here, below the 8-period EMA here. So you would have gotten out in a pretty good place. Even if you were kind of iffy about this, okay, fine. Then the next day you would have gotten out here, all right, for a nice run up. And it gets you out nice and early, so it's not super risky. Now, since it doesn't work perfectly, there is risk involved. I want you to be aware. For example, if let's say you're in the trade and then the next day there's a huge gap down the next day. You wake up the next morning and it gaps way down here, and you could take a big loss in that instance, all right? So be aware, it's not risk-free, but this strategy is interesting because what you have is you're getting in with the trend, okay? You're getting in on an uptrend. You're riding it hopefully for a long time. That's the idea. That's where the money's made, right? And then the red line gets you out oftentimes, not always, but oftentimes the red line, the 8-period EMA, will get you out quicker, as you can see here, than the 20-period EMA, all right? Because it's usually higher if there's an uptrend going on, all right? And that bullish engulfing pattern is oftentimes just a nice signal, not perfect, but nice, letting you know that the bulls are ready to take control here, and indeed they did here with AMD stock for quite a while, all right? So this is just one example. Test it out with demo or virtual trading without using real money. Make sure it works for you before you even consider committing any real capital to this, all right? Well, I hope this was helpful to you. It's just an idea, and see if it works for you, all right? But again, have a plan for your trading, for your investing. If you'd like some help with that, you can email me for coaching. My email address is right there on the screen, davidmodell@gmail.com. I hope this was useful to you. All right, so thanks a lot, and I will talk to you again soon.